Joining us now is Stephanie Link, Chief Investment Strategist at Hightower and a CNBC contributor. The Dow has moved up a little. I guess that helps with J.P. Morgan up now $8.
Yeah.
And the numbers that, I guess, a revenue number, we have to use managed, and we use, I don't know, regular ones. I always am hesitant to try to compare that. But for the most part, everything is above. There's the revenue number you can see right there, 46 versus 44.1. Any flies in the ointment at this point that you see?
No flies in the ointment. The expectations were extremely low. So for J.P. Morgan, it's down 19% from its highs. It actually trades at about 2 times book. It's a little rich. However, it's rich for a reason, Joe. ROE was 18% in the quarter. ROTCE was 21%. The CET1 was 15.4%. These are really good numbers. Average loans grew 2% year over year, pretty much in line. Expenses also a little bit better than expected. I really do want to hear what they have to say, obviously, on guidance, but what are they thinking about in terms of expenses? Can they manage that down in a rocky environment? They probably can. Wells Fargo also down 22% from its highs. It's trading at 1.3 times book. Earnings were better than expected. Credit provisions were better than expected. Non-interest income, things they can control, are actually better than expected. On the flip side, a revenue miss and net interest income miss, which I don't think is a surprise. But again, I think the expectations were really low for the whole group. And so I think if you just meet with a couple of positives and not crazy negative guidance, I think the stocks can rally from here.
The financial press in the headline, Stephanie, they're saying the profit jumped on a boost in deal making. Did you look at this, Sorkin? Is there a boost in, was it good, Steph?
Well, I think it was better than feared. How's that, right? Because obviously when Trump won, everyone was talking about M&A is going to explode and deregulation is going to be very positive for the sector, as well as lower taxes. Lower taxes and M&A eventually is going to come back, Joe. There's no question. It's just a bit volatile at this moment in time. But the stocks are down so much from their highs, and the valuations are very attractive. So, I mean, I don't see why. I mean, I've been adding, I've been wrong, but I've been adding to banks and to a lot of different stocks and sectors because I just think that we're getting really negative at this point. We talked about this last week, that the fear and greed index for the overall market, Joe, it hit 4. Back in COVID, we were at 2. Right. So, I mean, the VIX, it's kind of crazy. It's had its 3rd best week last week ever. So to me, it's like we're talking about extremes, and the banks are very well capitalized, and they are in a good position for whenever we can get resolution on this macro stuff.
Yeah, and quite a lot is devoted to the macro background from Jay. Do you think he mentioned the bank mentions inflation is still sticky? You saw that number earlier this week. Did that surprise you?
Yeah, I mean, I think that was good news, and I think you're going to continue to see inflation actually gradually come down. I mean, look at commodity prices, right? That's actually really. It's pretty. And look, I mean, it was a good number yesterday, and we didn't even talk about the CPI yesterday. All we were talking about was obviously the trades issue, right?